Most traders wait for news. They mark calendars, they stare at countdown timers. They believe movement begins with announcements. I believe that too. For a long time, my identity as a trader was built around volatility, not prediction, not fundamentals, movement itself. Fast markets, wide ranges, big candles. So naturally, news felt like oxygen. Central bank decisions, economic releases, unexpected headlines. If volatility was my edge, then news was supposed to be my fuel. That belief lasted years, and it cost me more than bad trades. Here's the part no one talks about. Volatility does not mean opportunity. It only means activity. Those two things are not the same. Most traders learn that lesson slowly. I learned it the hard way. There was a stretch of time when I was doing everything right. Risk was defined, size was controlled, entries were clean. Yet something was off. I would prepare for a major release, plan scenarios, map levels, wait patiently, and then the market would explode. Sometimes it moved in my direction, sometimes it didn't. But almost always it felt random, unanchored, uncooperative. The same setup that worked beautifully on a normal session would fail spectacularly during news. Stops were irrelevant, targets meaningless. It wasn't just losing, it was losing without learning. That's the dangerous kind. Because when a trade fails for structural reasons, it teaches you something. When it fails due to noise, it teaches you nothing. At first, I blamed execution, then psychology, then speed. I told myself I just needed faster reactions, better tools, more screen time. That was the lie. The truth was simpler and more uncomfortable. The market I thought I was trading did not exist during news, not in the way I needed it to. News does not reveal structure, it overwhelms it. During scheduled events, the market stops expressing itself through patterns. It starts reacting to imbalance. Orders rush in without context. Liquidity pulls back. Participants with different time horizons collide. You're no longer trading a market, you're trading a crowd. That distinction matters more than most traders realize. Because edges are not universal, they are conditional. Mine depended on structure, on rhythm, on repeatable behavior. News sessions stripped that away. At some point, I stopped asking why I was losing and started asking a more dangerous question. Why am I even participating here? That question alone changed everything. Most traders never ask it. They assume every session deserves their attention. Every candle is an opportunity. That assumption keeps them trapped. I started tracking something different, not profits, not win rate, participation quality. I looked at when my best trades occurred, not by setup, by session. The pattern was obvious once I stopped ignoring it. My strongest trades happened when the market was calm enough to reveal structure, when price respected levels, when movement unfolded instead of exploded. My worst trades clustered around events, not just losses, but confusion, missed fills, slippage, false breaks, markets that didn't behave like markets. That realization created a conflict. Because if I removed news trading, I wasn't just changing a tactic, I was abandoning an identity. I had told myself I was a volatility trader. That label felt earned, it felt precise. But it was also limiting. Volatility was never the edge, structure was. Volatility was just a condition where structure sometimes appeared more visibly, until it didn't. That's when the participation filter became unavoidable. A participation filter is not about entries, it's about permission. Permission to trade, or permission to stand aside. Most traders build filters around indicators. Few build them around market state. News creates a different state. Different participants dominate. Different incentives drive behavior. Different outcomes emerge. Trying to apply the same edge across incompatible conditions is not discipline. it's denial. The moment I accepted that, something shifted. I stopped asking how to trade news better. I stopped asking how to be faster. Instead, I asked a quieter question. What sessions actually allow my edge to exist? The answer excluded most news events. That wasn't an easy decision. It felt like stepping away from the action, like choosing boredom over excitement. But boredom has structure. Excitement rarely has. Here's the uncomfortable truth. News trading rewards prediction, speed, and tolerance for randomness. Structural trading rewards patience, alignment, and selectivity. You can respect both, but you can't pretend they're the same game. Most losses don't come from bad setups. They come from trading the right setup in the wrong environment. That's what news was for me. The wrong environment. Once I saw it clearly, continuing to trade those sessions felt reckless. Not brave, not aggressive. Reckless. So I did something most traders refuse to do. I quit trading during news. Not temporarily, not experimentally. Completely. No exceptions. No, this one looks different. That decision didn't reduce my opportunity, it clarified it. And clarity is what most traders are actually missing. Because the market is always moving, but your edge is not always present. Understanding the difference is where real trading begins. Quitting news trading did not bring relief immediately. It created silence. And silence is uncomfortable when you're used to motion. There were days when I would sit through major releases doing nothing, watching candles stretch and snap, seeing others celebrate wins or complain about losses. Every instinct told me I was missing out. That instinct was the real problem. FOMO is not about money, it's about identity. When you define yourself as an active participant, inactivity feels like failure, like weakness, like falling behind. But the market does not reward participation, it rewards alignment. That distinction took time to sink in. In the weeks after stepping away from news, my trade count dropped sharply. So did my adrenaline. At first, I tried to compensate. I traded more aggressively in normal sessions, forced marginal setups. That didn't last long, because without the chaos of news, structure became impossible to ignore. I started seeing how often I had mistaken movement for meaning, how many trades were justified by volatility instead of context. News trained me to react. Structure demanded that I observe. That shift exposed another uncomfortable truth. I was never good at news trading. I was just occasionally lucky. Luck feels convincing when it arrives fast. It feels earned when it's dramatic. But it does not repeat on demand. Edges do. Once I removed event-driven sessions from my data, my results changed in a quiet way. Drawdowns became shallower, recovery faster. Not spectacular, just stable. Stability doesn't excite traders, it bores them. But boredom is where patterns reveal themselves. I began refining something most traders never formalized, a participation filter based on who was likely active in the market. Not retail versus institutions, that framing is too simplistic. I focused on time horizon. News sessions compress time horizons. Everyone reacts at once. Short-term motives dominate. Structural sessions expand time. Participants with similar horizons interact. Price has room to negotiate. That negotiation is where structure lives. Support and resistance are not lines, they are agreements. Agreements require time. News destroys that time. During events, price doesn't negotiate, it lunges. That lunge can be profitable, but it's not repeatable in the way structural edges are. Once I framed it that way, the conflict eased. I wasn't avoiding opportunity. I was avoiding incompatible conditions. That realization carried a deeper implication. If sessions matter this much, then most traders are overexposed by default. They trade whenever they are available, not when their edge is. Availability masquerades as commitment, but it's just convenience. Markets don't care when you're free. They only care who else is participating. I started mapping sessions the same way I mapped setups. Which hours consistently respected structure? Which hours routinely ignored it? The results were uncomfortable. Some of the most popular trading windows were the worst for my style. High volume, high attention, low cooperation. The best windows were quieter, often overlooked. That alone explained years of inconsistency. I had been forcing my edge into the wrong crowds. The realization wasn't sudden, it accumulated. Each clean trade during a calm session reinforced it. Each avoided loss during news confirmed it. Eventually, the question stopped being emotional. It became practical. Why trade environments that neutralize my strengths? There was no good answer. That's when the shift completed. I stopped thinking in terms of setups first. I thought in terms of environments. Is this a session where structure can emerge? Are participants likely aligned in time horizon? Is liquidity stable enough for negotiation? If the answer was no, I didn't care how good the setup looked. That discipline felt restrictive at first, then it felt liberating. Because saying no reduced noise. Noise drains energy. With fewer trades, focus improved. Preparation deepened. I wasn't scanning for action anymore. I was waiting for alignment. That waiting sharpened perception. Subtle changes in behavior became obvious. How price approached levels, how it reacted after small breaks. Things I never noticed during news chaos. Those details were always there. I just couldn't hear them over the noise. Here's the part most traders misunderstand. Avoiding news is not about fear, it's about respect. Respect for the conditions your edge requires. Respect for the limits of your strategy. The market offers many games. You don't have to play them all. Once I accepted that, the internal conflict dissolved. I wasn't quitting volatility, I was redefining it. True volatility is not speed, it's meaningful range within structure. News produces speed, structure produces opportunity. Those are different currencies. And once you stop confusing them, trading becomes quieter, more deliberate, more honest. That honesty leads to the final realization most traders resist. You don't need to be present for everything. You only need to be present when it matters for you. Everything else is distraction. The hardest part was not quitting news. It was trusting what replaced it. Because once you remove an entire category of trades, excuses disappear. There is no external event to blame, no headline to explain slippage, no spike to justify impulse. Only structure, or the absence of it. That forced accountability. I began each day with a different question, not what might move the market, but whether the market was capable of behaving, capable of respecting levels, capable of pacing itself, capable of revealing intent. Some days the answer was no. On those days, I did nothing. That sounds simple. It isn't. Doing nothing requires conviction, especially when screens are moving and others are involved. But conviction comes from evidence, not willpower. I built that evidence deliberately. I documented sessions I skipped, not as missed opportunities, as avoided risk. Over time, the data spoke clearly. The trades I didn't take during news would not have improved my equity curve. They would have increased volatility, not the useful kind. Meanwhile, the trades I did take during structurally cooperative sessions shared a quiet consistency. Modest moves, predictable reactions, contained risk. They weren't impressive individually. Together, they were reliable. That reliability changed how I experienced trading. There was less anticipation, less tension. I no longer waited for something to happen. I waited for conditions to allow something to happen. That distinction matters. Most traders chase moments. Few wait for states. A state is sustained. A moment is fleeting. Edges live in states. Once that became clear, the participation filter became non-negotiable. If a session was driven by scheduled news, I was out. If liquidity was thin and erratic, I was out. If participants were reacting instead of negotiating, I was out. No exceptions. That rule simplified decision-making more than any indicator ever could. It also reshaped how I viewed patience. Patience is often framed as endurance, as resisting impulse. In reality, patience is alignment with reality. When conditions are wrong, waiting is not discipline, it's accuracy. That mindset reduced fatigue. Trading stopped feeling like a test of character. It felt like observation followed by action when appropriate. That's how professionals operate in other fields. They don't force execution into hostile environments. They wait. Another unexpected change followed. My confidence became quieter. Not because I was winning more dramatically, but because I understood why I was trading when I did. Confidence built on clarity doesn't need reinforcement. It doesn't spike after wins or collapse after losses. It remains steady. Losses still occurred. They always will. But they made sense. They happened within known conditions, within an environment my edge was designed for. That made them tolerable, informative. Losses during news never felt that way. They felt arbitrary. Removing that arbitrariness restored trust in the process. And trust is the foundation of longevity. Most traders burn out not from losses, but from confusion, from not knowing whether results are skill-based or random. News blurs that line. Structure sharpens it. As weeks turned into months, the decision to quit news stopped feeling like a rule. It felt like common sense. I no longer identified as a volatility trader. Labels became irrelevant. I traded when structure appeared. I didn't when it didn't. That's it. The simplicity was almost unsettling. Years of complexity dissolved into one principle. Your edge does not exist at all times. Respect that, and trading becomes manageable. Ignore it, and trading becomes noise. This is where most people misunderstand the takeaway. This is not advice to avoid news universally. Some traders thrive in that environment. It is a reminder to define your edge honestly, not aspirationally, not based on what looks exciting, based on what repeats under specific conditions. If those conditions exclude news, accept that. If they include it, respect its demands. But don't pretend all environments are interchangeable. They aren't. The market offers many paths. Most lead to nowhere if walked without awareness. The moment you stop forcing participation, something subtle happens. You stop needing the market to entertain you. You stop chasing validation through activity. You begin treating trading as a craft again. Measured, selective,
grounded. That shift doesn't show up on charts. It shows up in behavior. Fewer trades, cleaner execution, less emotional residue. Over time, that compounds, not just financially, psychologically. You begin to trust yourself again, and that trust is worth more than any single opportunity you skip. Because markets will always offer movement. They will always create urgency. But your job is not to respond to everything. Your job is to know when your presence adds value. Everything else is noise.